Welcome back to Explain the Charts, your go-to channel for in-depth technical analysis. Today, on November 26, 2025, we are diving deep into Alphabet, ticker Google, which has been making headlines with its explosive move to new all-time highs. Before we break down the charts, let's quickly cover the powerful news that's fueling this rally. The market is buzzing with excitement over Google's new Gemini 3 AI model, which analysts are saying outperforms its main competitors. This has ignited a massive surge in investor confidence, viewing Google as a dominant force in the AI race. Furthermore, there are reports that Meta is in talks to buy Google's custom AI chips, known as Tensor Processing Units or TPUs, for its data centers. A deal of this magnitude could be worth billions and would be a direct challenge to Nvidia's market dominance in the AI chip sector. This news has not gone unnoticed by major investors either, with reports of Berkshire Hathaway taking a significant stake in the company. In short, the fundamental picture for Google right now is incredibly strong, with AI serving as a massive catalyst. Now, let's see how this narrative is reflected in the price action on the daily chart. As you can see, Google has been in a steady uptrend since the market lows in mid-September. After a period of consolidation through October and early November, the stock was coiling, building up energy for a significant move. This basing period is crucial, as it often precedes a strong breakout when the right catalyst appears. That catalyst arrived in mid-November. Let's zoom in on the action from November 18th onwards. This is where the story gets really exciting. On November 19th, we saw a strong push upwards, but the real explosion happened on November 24th. The stock gapped up massively, opening at $311 and closing above $318 on enormous volume. This move directly corresponds with the positive news cycle surrounding the Gemini 3 model and the potential Meta chip deal. The following day, November 25th, we saw another powerful gap up, with the stock hitting a new all-time high of nearly $329. This type of price action, with large gaps on high volume, is a clear sign of institutional buying and intense bullish sentiment. The stock is in what we call price discovery mode, as there is no previous resistance to stop it. To get a better sense of the setup before this massive breakout, let's switch to the 1-hour chart from earlier in November. Here we can see the stock building a solid base of support in the $275 to $290 range. This multi-week consolidation allowed buyers to accumulate positions. It shows that before the explosive news hit, the stock was already showing underlying strength and stability. This is a textbook example of price consolidating before a major expansion. Now, for the most recent action, let's drill down to the 15-minute chart. This gives us a granular view of the breakout and the key intraday levels we need to watch. We can clearly see the massive gap up on Monday, November 24th, from the previous close near $300. The price never looked back, trending higher all day. Then, on Tuesday, we see another gap up, with the price pushing towards the $329 level before pulling back slightly into the close. These two gaps, one from roughly $300 to $311, and the second from $318 to $326, are now critical support zones. In the very short term, yesterday's low around $317.65 is the first line of defense for the bulls. If that level holds, it signals continued strength. The immediate resistance is, of course, the all-time high of $328.83 set yesterday. A clean break above that level would signal the next leg up. So, let's pull back to the daily chart and recap what we're looking at going forward. We are in a powerful, news-driven uptrend with the stock at all-time highs. Key support levels to watch are, in order, the immediate short-term support around $318, the top of the first gap at $311, and the major breakout point around the psychological $300 level. As long as the price remains above $300, the long-term bullish trend is firmly intact. Since we are in price discovery, resistance levels are speculative, but we should look at psychological whole numbers like $330, $340, and $350 as potential targets. Now for some potential scenarios. The most likely scenario, which I'd give a 70% probability, is continued upward momentum. Given the powerful fundamental story and technical breakout, the path of least resistance is higher. A sustained move above the $329 all-time high, especially on strong volume, would reinforce this and could target the $340 to $350 zone relatively quickly. A bearish reversal, which I see as a 20% probability, would likely need a broader market sell-off or some unexpected negative news for Google. The first warning sign would be a close below the $318 support. A break below the $311 gap would be a more serious signal that a deeper correction towards $300 is possible. There's also a 10% chance of a neutral consolidation phase, where the stock trades sideways between roughly $318 and $329 for a period. This would be healthy as it allows the stock to digest its recent massive gains before the next leg higher. Things to watch for will be trading volume. We want to see high volume on up moves and lower volume on pullbacks to confirm the trend's health. Also, keep an eye on the Nasdaq 100, as a downturn in the broader tech sector could create headwinds for Google. Finally, a quick reminder that this video is for educational and informational purposes only and should not be considered financial advice. All investment decisions should be made based on your own research and consultation with a certified financial professional.